How to prepare for a stock market crash. If you are a beginner and you are just entering the stock market game, even if you are a veteran, you will not disagree with me in thinking and coming to the conclusion that market crashes, stock market pullback are actually a good opportunity and a great opportunity to actually make some good money. Sometimes it can be life-changing money, but it is still some good money to be made because you buy the dip. But now the question is, today, everybody is kind of expecting a stock market crash to come. And there was a survey made a couple of weeks ago, and 50% of investors in the market here in the US are actually preparing and bracing themselves for a stock market crash. The main risk we are seeing now in the market, it's about inflation. And it's really a complex matter because we were supposed to have inflation anyhow with what 2020 brought. This is just the consequences of the 2020, the COVID, pushing factories into closing for several months with lockdowns, pushing people into staying at home with tons of money in savings to spend. And when they start spending that money, in addition to what they were already spending, well, there were no factories, there were no supply to actually meet that demand. And that's why we are now facing supply chain bottlenecks, because there are too many goods to be shipped out because people are keep buying. Maybe not as much and fast they were buying in the middle of 2020 because the stimulus money has now been used and spent, but still, those are the consequences of the COVID, especially when it comes to the stimulus money that the Fed has been pumping to support the economy. And when you really look at what the Fed has as main roles, it's about two things. First of all, it's to maintain, about price stability. And second of all, it's about the job market, unemployment. They have to maintain and make sure that we have full employment, so very low unemployment rates. So it's really difficult for the Fed now to actually say, even though we know they said they're going to reduce and increase rates, in 2021, by the end of 2021, but it's going to be a gradual, because if all of a sudden they decide to, let it go and we have interest rates now at 5%, 6%, people are going to freak out and remove money from the stock market. All right, because when interests are low, it means it's cheaper to have it's more affordable and more, it makes more sense in terms of gains. And when you do the math, to actually have your money work for you while you sleep in the stock market. But in the meantime, if rates increase, it means I can save that money. I can put it in the bond market. I can put it in some other type of asset to provide passive income while I wait for the storm to pass and for, the economy to stabilize and get that balance again. But nobody knows exactly how much time it's going to take. So inflation is coming, but most of the people now are seeing inflation as one of the bigger risks that is going to bring the market to crashing. Now, markets go up, markets go down. That is just the definition of the cycle of the market. But ultimately, they go high. When you look at the long term, when you zoom out, 5 years, 10 years, 20 years from now, the stock market will be higher than now. And the stock market now, it's higher than it was 20 years ago. So the question about how to prepare yourself to capitalize and make money during market crash, the golden rule is about having money set aside. Right now, we're so used to having those 10%, 20%, 50% gain on a quarterly basis because we bought the dip in 2020 and it was a very freaking low dip. And now the market went higher than what most of the strategists expected. And now with this inflation risk ahead of us, people tend not to take that much risk, especially as we are ahead the last quarter of the year. So just to say, be really careful about the plays that you are making, the money that you're investing, especially when it comes to the short term. I'm not talking about long term, medium term, or in your IRA 401k if you are one of those buy and hold investor. No, I'm just saying if you want to make sure you capitalize and you make as much money as possible within the market crash, you have to make sure you set aside some money now. If you have some good conviction plays like I do in the energy sector because of the crisis happening there, which is actually tied to inflation, yes, I will continue to hold, but I already took a little bit of profit. And as a matter of fact, I'm paying off my mortgage with those profits. But I'm still having, some positions that I'm going to hold for the 2022 and 2023 because the cash flow those companies are going to make based on where oil is heading are going to definitely be mind-blowing, and it's actually an hedge against inflation. But in the meantime, I also want to make sure I have some cash on hand, because if we go back down to 30, 12, 10, 12, even 20%, just like that, you can make 20% on your money in a matter of a couple of months, exactly as we saw back in 2020 with COVID and the lockdowns. I'm not still going to see a market crash bringing us back to 20% losses, but nobody knows exactly. We can see a pullback, definitely, because we are in this cycle where I think people are tending to be really pretty careful about where they invest the money in the stock market, especially because we have inflation. But I think nobody can know exactly how big it's going to be. But if you want to make sure you are prepared, make sure you have some cash on hand.